Nick, did you have any questions?
Jeff can go first if he's got a question. That way he doesn't lose his train of thought. He can go
Okay,
first.
there you go, Jeff.
Okay, yeah. So about 2 minutes ago, you talked about the part of the chart where you were in nowhere. And I was just wondering, to me, it looked like a fake out. And I was wondering if you see it as a fake out, and maybe if there's any way to avoid taking the bait on the fake out. Do you know the part where I'm talking about? Right, I think it's right on the screen now where it's sort of, yeah, it's dipping below the indicator, the ribbon, and it turns red, and then the ribbon, the indicator turns red. So to me, that looks like a signal to go short, but then it goes up.
But the indicator, I don't use it that way. An indicator like the whole suite, it really should be used in combination with like other time frames and indicators. As far as fake outs are concerned, the way I would actually deal with that is in a consolidation. Here, you have a pretty clear consolidation building. So if I were to kind of go back,
It looks even a bit more like a fake out because it sort of breaks
these are
below that
definitely
zone
fake
that's
outs.
highlighted. Right?
With range trading, if you're doing strictly range trading, you just take your lumps on that because it's really profitable, right? If you have the range appropriately identified and you have your orders ready to go, then you can have a relatively tight stop. This is probably your first trade where you can trade the range. You probably would enter a little bit higher based on where it was at the time, and you could reasonably get like a 3 to 1, 3.5 to 1. So let's just say 3 to 1. You put in 1,000, you pull out 3,000, right? And then you have this second trade where you're going to enter, you're going to put in your 1,000, you're going to lose 1,000. Well, you're still up 2,000, right? And then you have it re-enter the range, and you can just go ahead and take the next time it touches the top here. You might just account for the fact that this is a deviation and get like a 4 to 1, or you might even have a longer stop and still pull a 2 to 1. You put in 1,000, you get 2,000. So now you're up 3,000, down 1,000. So you're now up 2,000. Now you're back up another 2,000. So you're at 4,000. So it faked out. So what? You still won the trade, right? Now you might lose 1,000 here, but then you make another 2 or 3,000. So it's not that you can avoid the fake outs, is you take your lump on the fake outs and you just make sure that your trades are going to yield a better risk to reward ratio on the winners so that when you take your lumps on the losers, you know, so be it, right?
Yeah, that answers it.
Do you want a free algo? There's a link in the description. Copy and paste it, and I will send you a free algo immediately. We'll see you at the top, algofactory.tech.